We have 45 minutes, and we will have a very interesting session. We have to make the questions brief so that we can take a lot. Some of the things we'll be discussing, we have flavors from Professor Uzo's and Razak's presentation. But starting from Razak, I would like you to double-click on a couple of things in your presentation, just listening. Cowrywise is a very good success story. Running a business, becoming profitable, scaling to 1 million customers, being profitable 3 years after your license. There's a whole lot about lessons in business scaling and profitability in that story. I'd like you to expand on it. And looking forward, you said 1 million, you actually want to get 10 million. Because if I understand your presentation, you said it will be a geometric growth in multiples of 10. Where would that, share with us the lessons in business scaling profitably, because it's very relevant to a whole lot of tech companies in Nigeria today. Some are getting it right, some are shutting down. You got to scale, you got to be profitable. Then you have to grow into the future. So there's a whole lot that is packed in there. So scaling profitably, where will your next 1 million come from? What are your lessons? Share with us, and where will your next 1 million customers come from? Are they going to be people like this same Gen Z and millennials that you talked about in your presentation?
Okay, thank you so much for the question. I think we need to first look at the cornerstone of what builds a profitable mindset, or a mindset that drives profitable behaviors in companies. And for us, I think the first watershed moment for us was during our YC days. So we had this meeting with a YC partner, and one of the key items to be achieved at that session was to be able to identify the North Star metrics that are fundamental to Cowrywise. Of course, at that point, we're fascinated by so many things. Anything that goes up fascinated us at that point. It could be downloads of the app, it could be Twitter impression, it could be anything. It doesn't matter if that thing was actually related to the substance of the business. So during that session, we're able to come out with something that we still use till today. And this was as far back as 2018. And that was, what is that singular metric that when you measure it obsessively, you can establish a positive correlation between the growth of that metric and the sustainability of your business. And at that point, we established that the key thing we need to measure, it doesn't matter any other thing, has to be asset under management. For our own type of business, it has to be asset under management. It doesn't matter if we process 1 trillion naira worth of cash, or if you have 1 billion customers. No. What matters at the end of the day, the sum of everything at the end of the day, is asset under management. Because as an asset manager, that is the ultimate measure of success for you. You are basically helping customers manage their funds. You are their custodian of value. If you are unable to grow that metric, then being in business is not really successful. So it doesn't matter if you process X amount or B amount. What matters is how much money are you holding on behalf of customers and managing for them. And beyond that, we now narrowed it down to individual customers. Because our customers are young, we measure it by looking at what is the average AUM per customer over time. We see a customer, we see ourselves as being successful if the average AUM for a particular customer is growing over time. Because that is a clear measure of us adding value to their customers. One, by either helping the customer form an investing habit, or by helping the customers generate return from what they've invested. So looking at those things, it makes it a lot easier to draw a straight line between that particular metric and the success of the business. So if AUM is growing, we know for sure from an economic standpoint, there is a correlation, positive correlation between that growth and our revenue. And then the next thing will be, how are we able to manage our costs sustainably, such that we don't do more than ourselves, as the Yoruba people will say, when we should dry low. Timing matters. Every company wants to be known worldwide, but you just need to identify the time that will make it a lot easier for you to deploy capital to be able to do that in an effective way. It is easy for companies to look at what others are doing and want to emulate the same thing without actually contextualizing that initiative within the reality of the company they run. So every company has its uniqueness. And being able to be truthful to yourself by identifying those uniqueness is extremely important for the success of the business. So the 2008 foundational discussion that helped us establish our North Star metric is our guiding light. And what we've done again is to ensure that everyone in Cowrywise understand that. At some point, I think they changed my name to AUM. Every staff retreat, there is always the discussion around AUM, where we are at, where we want to be at the end of the year. Everybody runs with that.
So, Torres, I would like you to double-click a little bit on that. You are a digital asset management business. As I listen to you, AUM sounds like what I will hear from a normal traditional
Asset manager.
Asset management companies. How is yours different? That would be one of the key lessons. How
Okay.
you do business. You look like AUM per customer may not be the typical metric of the traditional asset manager. Because if 5 customers probably give a bill, 10 billion, everybody's fine. But it will look like it's important to you. I would like to double click on that because this is also a tech case for people to learn from.
Yeah, so we are an asset manager, but we are a digital first asset management company. But digital first is just a qualifier. At the heart of it, we are an asset manager. So what we are doing is to leverage technology to fast track our growth, to make investments a lot easier for people to have access to. At the core, the investment products haven't changed. We haven't changed anything in mutual funds. Mutual funds are still mutual funds. We have not changed anything in treasury bills. We've not changed anything in Eurobonds. We've not changed anything in stocks. They are still the same thing. What has changed is the layers that we've built around these products and how people access those products. For example, there is an important layer around football. Sorry for those who are Madrid fans like me. I think these are sad moments. Yeah, but we'll bounce back as usual. This is how passionate Nigerians are about football. We are extremely passionate about football. So what we try to do as a digital-first asset management company is to see how do we connect what people are passionate about to investment. That connection is extremely important because sometimes investment can be very boring. We need to make investments exciting, and that's exactly what we're doing. So at the core of what we do is traditional asset management, but layered on top of that are the digital-first initiatives that ensures that the traditional asset management business becomes extremely sustainable.
Thank you very much, Rusla. Can you hear me well? I want to be sure that the mic is... Okay, good. All right. I want to go to Dr. Achille. Am I pronouncing well, sir? Dr. Achille. Yes, sir. This morning, when I was coming, I had to check a FINA access to research data, which measures our progress as a country in financial inclusion. I was particular about looking at savings in terms of digital financial services. The data showed that savings, the percentage of Nigerians who are using any form of digital savings, payments, digital savings, grew from 24% in 2010, and 2023, when that report was done, it was 34%. Savings is probably a good proxy for investment. Probably not perfect, but people who save will probably also invest. So investment might be a little bit still lower. But what's important there is that 70% of our people are not doing even the basic savings. And we have grown savings 14% in 13 years. That's like 1% average growth per year. So the trend is not moving. What is the role of the regulator in promoting inclusive savings and wealth management to connect to that dream of prosperity for every Nigerian that Cowrywise is talking about? Thank you, sir.
Okay, thank you very much. I would like to begin by making an introduction of what the regulator represents in any space in the market. The Securities and Exchange Commission is the apex regulatory agency in the capital market. And by that, I mean an institution that was established to develop and to regulate the capital market. So whether you call it the conventional asset space or the fintech space, SEC has been established to have oversight over the capital market as a whole. And it's a market where there is mobilization of savings and investments from the surplus sector of the economy to the deficit sector of the economy. And by that I mean an institution that has the authority, the mandate of government to regulate this space is being positioned as the capital market head, and that's SEC. Now SEC has been at the forefront in creating a level playing field to ensure that all participants in the market play by the rules. That is one. SEC register all securities, all intermediaries that come into this space to trade. So depending on the nature of the asset you have, whether it is fintech product or the conventional asset, stocks, you could have debentures and debt instruments. SEC provides the level playing field for regulation in this space. Now, stepping into your question proper, how does SEC ensure mobilization of savings and investments to ensure that the statistics that you have given reduce? There are a couple of ways we do this. SEC has been involved in a lot of initiatives to ensure that this statistics reduce and that people get sensitized on the importance of investing in this market. When you receive the boom in the whole world, that fintech is in place now, SEC set up a department. We call it FILO. FILO is Financial Technology Department. And this department squarely is responsible for providing oversight over the instruments that are being brought into the market space, and also the various companies, the fintech companies, coming for registration within this space. We've had different initiatives like the incubation period, the accelerated incubation period, where we test the companies that are coming in for listing and see their fitness to deal in this space. SEC has done that. The second part is, excuse me, SEC has also issued a couple of regulations, like the crowdfunding regulation that tends to regulate the crowdfunding space. Also, there is a regulation on digital assets, which has been issued by SEC a couple of years ago. There's also regulation on virtual asset service providers, which has been issued by SEC, with the aim to foster development of this market and also the space, the fintech space. So with this, I think SEC has done a whole lot in ensuring that there's mobilization of savings into this space, thereby reducing the demographic that you mentioned. Thank you.
Thank you, sir. Thank you, Dr. Achille. Professor Uso, I'm coming to you now. And Razak, please also be ready to ride on Professor Uso's contributions now, because the next 1 million customers of Cowrywise, I want us to discuss that further. Are they the same? How would applying that segmentation principles that you are talking about, and we know, Prof, that during your inaugural lecture, you espouse a lot on this informal market. I don't know. Should the next 1 million customers of Cowrywise not look like those Gen Z millennials? How would the principles of segmentation, the understanding of informal market, help a business like Cowrywise to bring in those customers and to make them sticky, for example, which is one of the key objectives of a business like Cowrywise, because it's not just to do a transaction, it's also to be there for a long time. Let's draw from part of that inaugural lecture, Prof.
All right, thank you very much. So, when we think of Nigeria's informal market, there are many things that stand out there. And I'm remembering the time when I started first with Nollywood, and then I moved into studying street selling, hawking on Third Mainland Bridge, to all sorts. Now I'm in the retail world, but that's a separate conversation. A couple of interesting things when we look at how this affects segmentation and Cowrywise's approach. A lot of the people who may form the next million will be, if they are not informal sector players, they will be buying or transacting through that channel. So it's also good to know what some of the common behaviors of operators in that channel are. I know that trust is very important. It continues to be important for people at that level. It's a trust-driven market. And because of this, community leaders, influencers tend to play a very key role. I remember working with someone in the real estate sector who wanted to sell 1,000 housing units to informal sector operators in Balogun supermarket, Balogun Trade Fair. So that's where they call Aspamda or that area. And the lady spent almost all her time moving from shop to shop and couldn't get even one deal closed until someone told her that she had gone through the wrong approach. That there was one guy who was in some quiet shop that was the guy who made things happen. He was the chief influencer of everybody else. And she had to change her approach and went through him. And she was able to sell about 300 of those housing units. She didn't pay a bribe, anyway, in case anybody's mind went there. You know, so, but I think if we tie this back to segmentation, if we want to classify and keep sustainable customers, then trust, the level of trust has to be an important criterion in mapping that. The level of financial education that they have is going to be important. Who their influencers are, what their views about wealth management is going to be very important, you know. And then we have to keep an eye on their spend behavior as well. The rate of disloyalty among consumers in Nigeria continues to grow. you know. So it's again keeping an eye on those variables. So maybe in the end, it's not really about doing something very, very different from the normal way you segment, but it's about using the right variables to ensure that you have the right customers that will stay with you for the long run. I think that's the approach.
Thank you, Paul. So, notice, I will put to frame the question for. In strategy, we say there is no, if you don't have good segmentation, you can't have a good strategy. Because your strategy will not be generic. So this is a very important position. Razak, I'd like to double click again about a couple of segmentation applications in your presentation, which you probably should expand into it on. You mentioned life stages in your conversation. I happen to come from some businesses in the past where your customers today are young. When they become 40, would they continue? What kind of customers would they be? Will Cowrywise still be the kind of wealth management enabler? I'd like to speak to that in the context of the future of the business and some of those segmentation implications that you imply in some of your presentation.
Okay, thank you for that. Let me drive this home by saying that I'm a GT Bank customer. And I've been using GTB since 2006. Not that I'm satisfied with their service 100%, to be honest, but I've been using them since 2006. And why am I using them? It was the first bank account I ever opened. They allowed me to open the account with zero balance. And then I was a loss-making customer to them because immediately money hit my account. I was already waiting at the bank branch to withdraw that money. So definitely I was losing money. I was a loss-making customer. But I stayed with them somehow. There is that, of course, not everyone will do that, but a small percentage of customers will have that behavior and they will retain them. So that's the first part. And that's exactly what we're trying to replicate with the Campus Ambassador program. But the Campus Ambassador program has a bigger ambition than just retaining customer. It is also about building a generation that is financially aware, that is financially educated. So when they make decisions, they are making the correct decisions. So our responsibility as a company is to ensure that we build products and services that match the correct decisions that customers will make. We've seen instances where businesses rely on short-term trends to want to build out businesses. Short-term trends are what they are, short-term trends. It will be corrected. If you build a business on short-term trend or on the fact that the customers are not aware right now, they will eventually become aware. So where we are positioning the brand is to ensure that we educate the customers correctly, banking on the expectation that they will make the right choice when it comes to their financial decisions. I think in 2022, I got an invite to deliver a lecture here. I remember. And guess who invited me? Someone working here who was a campus ambassador in Cowrywise. So what I'm saying basically is that our campus ambassadors are maturing. They are coming of age. They are changing the narrative where they work. They're in every. If you take samples of companies in Nigeria, it will be very hard for you not to say campus ambassadors. Cowrywise campus ambassador working there. So technically, we've built foot soldiers who passively are just, telling the Cowrywise story. And we are that.
So the campus ambassadors, are they salespeople?
No, they are not. They just love the brand.
They're advocates.
They're advocates. So they were campus ambassadors when they were in school. They finished school. They're using the product. And they passively talk about Cowrywise anywhere they are. They're not being paid. They just love the product. Right, so we have thousands of them right now. And to further corroborate that, we're, unexpectedly, someone reached out to me on LinkedIn I think that was less than a month ago. he works at Shell. And he mentioned to me that his daughter is a campus ambassador. That the daughter has been talking about Cowrywise at home for a while, and he had to say, what is this Cowrywise about? So the point is, we're reaching out to parents through their kids. We didn't plan that, but it's happening. Now imagine thousands of households that Cowrywise will reach out to just because we're reaching out to campus ambassadors on campuses. So the implication is that the composition of our next million customers, by the way, I have a privileged information, I don't think the next 1 million is exciting anymore because we've already done almost 500,000 of that between the time this case study was done and now. So I'm not sure that's exciting anymore. So I think we should be talking about the next 10 million. Right. So the point is, I think the composition of the next set of our customers will partly be influenced by our existing customers. Say, for example, kids who are introducing their parents to use the Cowrywise product. Campus ambassadors that have matured, they are now probably in their first career, first job at work, influencing their colleagues at work to use Cowrywise. Even though we're still doubling down on expanding the reach of the campus ambassadorship program, we believe strongly that the next cohort of customers we're acquiring will be more matured, will be more financially educated. And those things will influence the kind of product we build. We're also very much aware of the different stages of our customers, which is why, for example, we're building out Nests, which is a kiddies account. There is an increasing proportion of our customers who are getting married, who are having children. So how do we ensure that we build a financial ecosystem that takes care of every single need that they have as they grow older? I mentioned earlier as well that we'll be introducing retirement plan. Yeah, we have a bit of a small, very tiny percentage of our customers that are very close to retirement, but I think the need to have a retirement product is growing as we have customers maturing into that stage. So the whole idea is that at every stage of the customer's life cycle, we have a specific product that matches that important financial need that the customers will have. That doesn't mean we'll have 100% retention, but we want to position the product and the brand as a single source of all the financial need that anyone can possibly have, including insurance as well. Insurance is an important part of wealth management. Even though, yeah, we may not do insurance like licensed insurance, I think we've seen what partnership can unlock. The same thing with credit. Credit is still very much underpenetrated in Nigeria. And credit can be a significant source of leverage for wealth creation for people. We have to do something about it. Not that we get a banking license to start issuing credit, but how can we creatively leverage the assets we manage, for example, to unlock value for the retail investor? So these are the long-term plans that the company has, and the belief is that once we build all of this, we have an ecosystem of products that an average person will find extremely useful as they grow older.
So I'm just curious. So if Cowrywise do asset management, insurance, credit, like a kind of supermarket, so how will you manage how your brand evolve? And does it create its own type of issues of focus? What do you think? It's neither here nor there. It depends on what you're trying to do.
Yeah, so I won't sit here and claim I have all the answers, to be honest. Some of these things will be figured out as we move along, but there is some resemblance of clarity that we have as at now. And the idea is that when you look at an average person makes money, well, expectedly. An average person should make money. An average person should spend money. An average person should invest money, should save money. An average person should have insurance. An average person should marry, should have kids, should buy a house, should, there's so many things. And all of these things are financial decision-making embedded in them. So the way we're looking at wealth management into the future is that wealth management will be different in the future because the world we are in right now is different. And interestingly, the world is changing even faster than we think. So the way wealth management will have to be done will be such that people need the capacity to simultaneously consume multiple financial products. So we started out with MTN, actually, in Cowrywise. The whole idea of Cowrywise started with partnership with MTN in 2017-16. And the whole idea was to partner with MTN to enable retail customers anywhere they are in the country to buy recharge card and then reverse engineer recharge card into money and move the money into investments. And that was the cool idea. But technically it was feasible, but commercially it didn't make sense because MTN was asking for, I hope there is no MTN staff here, MTN was asking for 40% of the money flow. And we're thinking if a customer is investing 1,000 naira, you want to take 400 naira of that, where do we get the 400 naira to balance the customer when the customer comes to get his 1,000? But technically it was feasible, and then we had to pivot into using card as a payment channel. But we know from day one that some skilled businesses in Nigeria, like telecoms, that have significantly large number of customers, provide an opportunity for businesses that are yet, or for industry that have not been penetrated largely, to leverage on. So I see no reason why the investment management industry can't leverage telecoms, because telecoms already scaled. They already reach out to 70 million people. And in this 70 million people, they buy a recharge card. They use telecom services. Definitely, there is no argument about whether someone needs an investment or saving. They need it. And that is what makes selling the product less difficult. You need savings and investments. There is no argument. I don't think anyone can argue that I don't need to save and invest. I think the family unit has done that, has solved that problem. At least an average person understands the virtues of savings and investments. The problem is usually how, or am I able to do it? Do I have the money to save and invest? But I don't think anyone will argue against whether you need to save or you need to invest. So that problem is partly solved. So what we now need to figure out is, how do we bundle investment with what people already love? If they already love making calls, how do we bundle investment with making calls? If they already love football, how do we bundle investment with football? If they love using Uber, how do we bundle investment with Uber? So those are the ways we think wealth management will evolve in the next decade. And that's why we're positioning Cowrywise to do.
Thank you. I like the way you've actually described also embedded finance and the pros and cons. And you also implied a con of embedded finance. Just to expand on it, if you use somebody else's platform, they will squeeze your margins out. The way Google and Apple squeezes the life out of all the software companies that use their platform because they will collect toll gate. So the side of embedded finance is that you can scale, but the risk of, as you succeed, the platform squeezes your margin, knowing that you may not be able to go anywhere, like Google and iOS is doing to everyone on their platform today and making money, is something to watch. But now let's go to something also very interesting, and I'm coming to you, Dr. Achila. This is a general question for everyone. So many people were burning offices from Abuja to Kano, Ibadan. Wherever CBEX were, there were millions or hundreds of people. And for many of us, we didn't even know what was CBEX. And we had 1 trillion, more than 1 trillion disappeared. What are the insights or lessons for investment and wealth management that the ecosystem could learn from this CBEX incident or event, both for the regulator? I like to speak, sir, from a regulator perspective. I would like to take Pro's view as an ecosystem citizen and professor, and take your view as Razak. Is it that the wealth tech people were not doing their job? Why did this happen? why do we let our people down, 1 trillion naira to disappear? Dr. Achille, over to you. Let's start from you, sir.
Okay, thank you again for that interesting question. Okay, so CBEX, as it is, offered itself as a digital asset trading platform. Although they were not registered by the known regulator within the capital market, which was expected. As I mentioned earlier, the hallmark of regulation is registration. If any institution to operate within the capital market space, whether the conventional assets or fintech products, the first thing is for that institution to approach the CAC for registration, then come to sector regulator, either central bank or SEC or NICOM for sector registration. In the case of CBEX, that wasn't done. There was never an application before SEC for registration of any platform for trading in digital assets. They were not known to us. Now, the unfortunate thing is it's a repeat of what has happened in the past. We have had the case of LM in the past. People got their fingers burnt by investing in that kind of investment vehicle that was not known to us. There is a repeat of that kind of situation. So the advice on it is for people to be wary, especially the investing public. You can't make investment through a vehicle that is not known. SEC does due diligence on either securities or the intermediaries that come forward for licensing. And that takes a whole lot. If CBEC was known to SEC, as we speak today, all their directors and their promoters would be in custody. But today is a different case. They were not known to us. None of their directors is known to SEC. So we could dwell upon maybe bilateral agreement that we sign with maybe under ISCO regulators as International Organization of Securities Commission, maybe to see if we can track the promoters of CBEX. Now, the question is this: if an investment offers a rate or a return on investment that is too good to be true, the common understanding is probably. But we see people, because of greed and maybe they didn't carry out the needed due diligence, went into investing in a platform that wasn't known. Until now, SEC did not even know of any institution like CBEX. Until the loss is crystallized, and it was late at that point to address it.
Thank you, sir.
So we've learned a hard lesson, and going forward, people should be cautious about where they place their hard-earned income. There are so many fraudsters. SEC does not control the entire tech space. So it will be difficult to track all the operators, legal or illegal operators that are found within this space. But be rest assured, SEC is doing its best to ensure that there is sanity in the system.
Thank you, sir. I'm told we are running out of time, but Razak, 1 trillion, that could have been in Cowrywise AUM. What does this CBEX mean to you?
Unfortunately, it is not. I think there are two.
What would the ecosystem do? Do these guys know about Cowrywise? Maybe that's why they went to CBEX. Oh, what is one?
I think before CBEX, before people lost money, I'm sure more people know about Cowrywise than CBEX. I think there are two categories of people, based on what I've seen, that participate in schemes like CBEX. There are people who genuinely know that is a scam, but they will still participate anyway. To be honest, I don't feel pity for those people, even after they've lost money. They knew quite all right that this scheme is a scam. And they'll still go ahead and participate in. You can't redeem them. I'm just being very honest. There is nothing you can do. They know. It's their choice. And to be honest, let them face the consequences. That might sound very harsh, but it is the reality. But unfortunately, we have people who fell for it as well, just because of what others are doing. And because there is this influencing that happens when investment is being done. When an innocent person sees someone senior or someone influential participate in a scheme like that, they naturally get influenced to participate as well. So there is that category of people who participated innocently and who lost money. And to those people, I think they deserve our pity. However, I think the recently passed Investment and Security Act empowers SEC to, more than ever, to bring promoters of schemes like this to book. The Act allows SEC to jail them for up to 10 years and some financial consequences. And I think once the ISA gets operationalized, expectedly, we should see a reduced instances of schemes like this. But it is so sad that people still fall for a scheme like CBEX. I'll give an example. I have a friend who mentioned to me, he used Cowrywise, and he mentioned it to me that he has an allocation for schemes like CBEX. An allocation as like he's acting as a portfolio manager. He has an allocation of his salary. He's looking for schemes like this where he wants to cash out before it crashes. So tell me, he's my friend. He knows if he lost money, what do I do? So for people like that, I think, I don't know, I don't have an answer for them. But from the stakeholders' perspective, WealthTech, regulators, industry players, we are doing so much, but I think we still need to do a lot more in terms of financial education, in terms of making sure that people have the right choice, the right options when it comes to making choices. So it will take a while, but I don't think we should feel disappointed. It's so sad that it happened. But we just need to look beyond that and march forward.
Prof, that's how I do it.
Okay, I'll not repeat what has been said, but there's this, Nigerians are very aspirational. And when you are very aspirational, there's hope, a lot of hope, and sometimes unrealistic hope. So you can imagine people who don't yet live in their own houses that we asked, in 5 years' time, if God blesses you, what kind of house would you like to live in? You can guess where? Banana Island, right? Okay, what kind of car would you like to drive? You will not believe it. Some people who don't have cars want to be in private jets in 5 years' time. So why would they fall for this kind of thing, right? So it's all, to deal with it, it's an ecosystem issue. So regulators, industry players, and consumer education is going to be important, because anybody promising you very fast, very quick wealth, you need to check again and be sure that you are making the right investment decision. So it's something that we just have, it's going to happen again. It's going to happen again. It's not something we can run away from. But I think as we educate the market and we work collaboratively, we can reduce the number of times that occurs.
Thank you, Paul. So CBEX is actually, for business like Cowrywise, CBEX is an opportunity story. That's what we should see it. That's how much people wanted some form of discount your friend. But a lot of people on the street genuinely want something. With the right education, they want to save, they want to invest. If they are aware of the right vehicle, if we in tech, we do not live in our own bubble in Lagos, Abuja, and Port Harcourt, because that's part of the thing. We tech people, our impact is still about Lagos, Abuja, Port Harcourt. All those people in Oshobo, They need to know about what we do. And digital can make it happen. The future, that 10 million is possible. We can take questions for 5 minutes. Perspective, questions, and comments. We take, because the panel is masculine bias, we will be feminine bias this time around. Madam, yes, ma'am, yes.
Morning, everyone. It's not a question, it's a contribution. Deputy Head of Regulatory Affairs, Ambika, in relation to SEC. So the primary purpose of regulation is to ensure compliance with laws, standards, and practices to safeguard public interest, protect consumers, and maintain fair competition. So I beg to differ on the blame game when it comes to fraudulent businesses in this space, that they are not registered with Security and Exchange Commission. It's not entirely the fault of the consumers, because the consumers, as they may not be privy to that. It will surprise you to know that maybe people here have also fallen everywhere, across board. It's not an issue of lack of education, ignorance entirely or partly. Nigeria should create a safe space for consumers in such a way that such businesses do not thrive in our environment. Such businesses should not have the guts to even conduct businesses for fear of monitoring by the regulators. There should be that consciousness on the part of the regulators to also. The business shouldn't have gone to SEC to say, or to CBN or whatever regulator to say, I want to register. They had a lot of clout. They had a lot of customers, including perhaps the SEC staff, who would, one way or the other, God would have gone out to see there is a business operating illegally. Even if it's not illegal, let's do a background check on that business to see. There is a hotel or there is a hospital, people are going, blah, blah, blah. Do we have them in our books? That is what it means to be proactive and prudent. I'm sorry to say, I'm not picking or pointing out at the regulator, but this is the environment we should be creating for ourselves so that individuals, businesses do not make such losses. It's a lot. Who do we hold accountable? People's livelihoods, people's lives. I mean, the government can do better than that.
Thank you, madam. There will be final comments so that we can save time. Madam in green, over to you. Yes, ma'am. Let's panelist note for final comments.
Good morning, everyone. I have a question, and somehow it stemmed from the comments of the first the lady that spoke. And my question I want to direct to John Tech. Yeah. I listened to you keenly when you were talking, and my question is this, because I work in the Nigerian insurance space, and then NICOM, as the regulator of insurance industry here, has done a lot, because we know prior now, the insurance space here was kind of funny. People in this part of the world don't really believe in insurance until NICOM had to wake up to that. Why? One of the major reasons is to make the consumers to be at peace, to have that trust. Now, my question is this. I heard you say the consumers need to do their findings to be sure if this place is safe, where to do their investment and all that, just like the experience of those that so far the CBEX and all that. My question is this. As SEC, don't you think there's something that can be done, like the first person that spoke, to, I know you cannot totally eliminate crimes and all that, to reduce to the barest minimum, just like NICOM is already doing in the insurance industry, to keep the mind of the consumers more at peace, if there's nothing of such, I think this is the time to go back and look at it and not waiting for, like she said, for the people to come to you to say, I have registered a company, or this is what we are doing. So you'll be at them and pick them out and fish them. Because as I'm talking now, Nikon does not joke with insurance companies. Why? The interest of the consumer is paramount to Nikon. Thank you.
Thank you, madam. Thank you. Questions? Two more? We just can just take two more. We'll take one lady so that we are biased and one gentleman.
Curious about, I think we've seen the numbers around remittance of the diaspora into Nigeria. Curious about how you're thinking about leveraging the diaspora or as part of like your growth strategy and your focus on increasing your AUM.
Oh, diaspora, very interesting. Good question. Gen Z millennials, sir. Yeah.
Hello everyone, good afternoon. My name is Oluwadaminola. I have a few things. The first being, I think we're a bit harsh on SEC because I think one key factor people have missed out of is the class difference. So the average Nigerian who fall for these schemes, they are all aware, even up until today, that there is the SEC. And I think one key solution that the SEC can do is they can publish a list of registered people with them, such that when these people come up, everyone knows how to use the internet. You can just check the simple search engine, CBX. Oh, we are not on the list. We know they are not to be trusted. That solves that issue, simple and short, on one hand. And then I think one key thing also that we don't realize is that there are perpetual financial scam influencers. Okay. There are perpetual influencing scamming, people. For instance, one example that Professor Ozo used with the lady trying to sell houses was she went around to meet these people, they didn't answer her. But there's one guy there, and they all answered her. And I think we need to contextualize this. The same way that happened is the same way. There's one person there. When MMM came, she was there. She cashed out the first 2 times. And she knew it was going to crash. And
especially influencers.
Yes, and not just social media influencers. I mean, in terms of interpersonal relationships, there's someone in the market who tells these people, tutunti deo. And they go, the same way we have ajos that sponsor, market scaling. They go, they put their money, they know after the first 2 rounds.
For example, be a criminal offense for an influencer to promote fraud, and they should be criminalized. The influencers are walking away after a lot of people have lost money. Those who in the US now, they are suing the musicians. If you go and promote a flop, maybe some of the things. Anyway, these are questions for the just the last one.
I'm sorry, my question.
I thought you were finished, so that we can take.
No.
Okay, 1 minute.
Okay.
30 seconds.
All right, that's fine. I think my question really is, as people in finance in general, how do we hope to bridge this gap? And I don't mean in terms of just, marketing, bridging the gap between the semi-literate and the more literate people, because there is a gap. If you speak to the semi-literate Nigerian about investments, all they can imagine, their perception is, okay, the usual things, ajo, or when I'm 40, I'll have my children, and that's what I'm doing. How can we bridge this gap to enable the belief that they are a part of the market? They don't believe they're a part of the market. How can we inspire these people to believe that they are a part of the market, that they're not just, low-income people, that even with their occasional 20,000, their occasional 50,000, after a particular period, because they do make quite a bit of money. After maybe their earlier 20s, they're used to living on 5,000. By the time they are 30, they are 40, they have quite a number of businesses. And they are able to actually raise significant money. They don't need to come to this investment.
Thank you, sir. What's your name, sir?
Oluwadaminola.
You have raised a big question of exclusion and elitism of wealth tech, the people, genuine people that lost money, a lot of those people in informal sector don't know. They are excluded from savings and wealth opportunities because wealth tech is still exclusive, is still very elitist. Will it be a consideration? The future, just like we now have the OPs who have taken banking to the Mamala Jaws and so on, and they are doing digital, is the future that in which you serve the Koyi people and you're able to serve people in Oshobo also with wealth tech in their own 20 naira and 30 naira and micro investment, micro savings and so on. I think that's the heart of what you are raising. I'm just trying to amplify it. I believe I like your point.
My own question would be, is there truly an opportunity within the Informal? You operate a digital-first platform, and they barely know how to operate digitally, basically. Would agent network relevant approach to adopt and acquiring customers the informal market? That's my question. Thank you.
Thank you. All right. We'll start from Dr. Achille.
Okay, thank you very much. And a lot of interesting questions and challenging ones too. So I will begin with what my young man said. Ola Damilola, I thank you so much. Now, I will begin by asking you to go to SEC website, www.sec.gov.ng. As you mentioned, that there is a need for SEC to publish on its website the list of operators that are licensed. If you go to SEC website, you see investor section. You search using any search engine you are using. You see the list of operators that have been licensed by SEC. I'll give you the site again, www.sec.gov.ng. You'll find that. Now, I want to thank you for your comment on the role of influencer and the need to criminalize the activities. It has been done already. What we need to do now is how to track these individuals that perpetrate this heinous act. Within the provision of the 25, there are provisions for penalty to be applied on influencers, but tracking them remains an issue. And even the promoters of this business that failed, or the companies that failed, SEC has a provision under the new act to track and apply penalty as sanctioned by the law. Then I'll move on to the concern shared by the staff of Stanbic, I think Aisha. It's unfortunate that she said what she said, but I won't fault you for one or two reasons. SEC has a very strong enforcement team, of which I'm a member of. And I can speak at any point of how vibrant this enforcement team has been. Even before the passing of this new ISA, SEC had a police unit that track incidences of Ponzi's within the market. So it would be wrong for anybody to assume that SEC was not doing enough in tracking the perpetrators of Ponzi schemes. 1,001 of them that we arrested in the past, sealed offices. I'm sure you are aware of it, and I think you should be able to give credit to SEC on that. Now, relating to what Mr. Razak said, that greed is the major driver of Ponzi schemes. I agree that the role of influencers or whoever they are within the space, trying to sensitize people and mobilize people for them to go into investing in illegal products.
But however, we continue to sensitize the investing public. If there are investment opportunities, carry out your due diligence. And part of it is either you consult a market operator that is knowledgeable in the area, or on your own. The mobile app is everywhere. Go to our website and search. Carry out due diligence before parting away with your hard-earned income. We've seen that. Then, in the principal roles of SEC that I mentioned earlier in my introductory, I mentioned that SEC has a role to develop the market and also to regulate the market. So what are the elemental rules? One, we do workshops, we do seminars. We infuse capital market studies in the curricula of even secondary schools. Universities, they do it. And this is an avenue of catching them young, trying to tell them which products are legal, which ones are illegal, the various opportunities that we have in the capital market. So sensitization has been at the front burner of SEC activities. Okay, so I don't really know what to say in addition to that, other than it is greed. Some people enter into all this product knowing fully well that they stand a chance of losing it. And like Razak mentioned, some of them lost money, they knew it before entering into it, and they didn't even blink an eye on it because they knew. It is a common advice in portfolio management that the higher the risk, the higher the return, the higher the risk, right? So instead of putting your money in government instrument, you decide to put it into a fund that will return 100% and you lose your fund. I am very sorry. I feel very bad about it. But that people should be careful about how they make investment. Before taking investment decision, it is key you do your due diligence. Thank you.
Thank you, sir. Okay, Razak?
Thank you so much.
Time is up, so.
Okay. So let me go straight to the questions. With respect to Cowrywise plan for Nigerians in diaspora, we don't have like a specific plan for it right now in terms of product offerings, even though there are some overlapping products that can be of interest to them. But if you have anything in mind, please, I'm happy to hear your idea. More than happy to do that. With respect to the informal market, obviously, I think there is an opportunity there in the informal market. And the channel of serving the informal market is different. That needs to be built. Agent network is an opportunity. And we've seen how agent network has grown in the past couple of years. We've tried to leverage that in the past to see what could happen in serving that segment of the market. It hasn't materialized positively. But I think the segment we're trying to look at and to be able to serve. However, I'm also very conscious of one thing, that we need more players to come up with different solutions in order to serve the broader markets. Cowrywise alone can't do it. That's the truth. And to be honest, we don't intend to solve world hunger. We will solve the problem that we are capable of solving, where we are capable of making the greatest impact. But is there an opportunity in the informal market? Oh, yes, I think there is. And we'll continuously explore ways to tap into that opportunity. But when others feel the same, that there are opportunities there, by all means, everybody is welcome.
Thank you. Prof?
Okay, well, this will just be a wrap-up thought. So we've spent quite some time talking about wealth management and distribution, very exciting topic. But I think my own call is for each one of us to think of one thing we can go away with that will help us improve on democratizing this idea of wealth management from the point of view of savings and investments. We've heard the Cowrywise story, very inspirational of what we can do. But we're only scratching the surface. As Cowrywise, as Razak mentioned, Cowrywise can't do it alone. So it's for us to also put our thinking caps and to have more fora like this, where we discuss, we dialogue, and then we take action. I think that's what will help us grow the pie at the end of the day.
Thank you, Prof. So, thank you, everyone. My closing comments as moderator would be that we will have succeeded the day in which government instruments, return on investment, have translation in Hausa, in Yoruba, in Igbo, and everyone on the street can understand what it means. They will understand when they see CBEX that there's something called return on investment that is unusual, that has a meaning to them. We have a duty to educate. Wealth tech is making progress, but it's still very, very elitist. We have to take wealth tech in this true spirit of democratization of wealth until it gets to those places. The job of democratization of wealth is not completed. And it's been proven in fintech that you can achieve democratization and profitability. In fact, the democratization and scaling at the low transaction cost of digital is the fastest route to scaling profit in wealth tech if we can collaborate to solve the problem. Thank you for being a good audience. Thank you.